Welcome to the HIV Benefits Programs webcast. This presentation is intended for human services staff who work with clients who are infected with HIV. By the end of the webcast, you will have a basic understanding of the federal and state benefits programs that are available. You will also be able to assess your client's eligibility for these programs and help them complete their applications. Throughout this video, you'll hear me talk about the presentation resources link. If you look at the bottom of this video player, you should see an icon that looks like a chain link or a paperclip. If you click that icon, you'll see a list of all the links and documents referenced in this video. By the end of the webcast, you will be able to identify the benefits programs that are available to people who have HIV, summarize the components of these programs, and explain the eligibility requirements for these programs. We will cover 9 general programs: Social Security Disability Insurance, or SSDI, Medicare, Medicaid based on disability, Supplemental Security Income, or SSI, State Disability Assistance, Insurance Assistance Program, State Emergency Relief, the Food Assistance Program, and the Home Help Services Program. After we have reviewed the programs, we will provide information for any additional advocating you may need to do for your clients. Let's get started. The first 4 benefits programs we will cover are Social Security programs that pay monthly cash benefits to people who, because of a disability, are unable to work for at least a year. When clients apply for either SSDI or SSI, they must meet the Social Security Administration's definition of disability. This means that they are unable to perform any substantial, gainful activity that would pay $1,070 a month because of a physical or mental impairment that lasts at least 12 months or results in death. Most opportunistic infections meet the requirements for disability, except pneumocystis carinii pneumonia, or PCP. However, the client's entire physical and mental picture will be examined, and HIV diagnosis alone doesn't make a client eligible. If your client has a CD4 count below 200, this won't automatically make them qualify for disability either. The Social Security Administration uses the term claimant to refer to the person who is requesting disability benefits. Each claimant must complete an application and other forms that describe the nature of the impairment, identify sources of treatment, and provide any other information that relates to the disability your client wants to claim. It can take 3 to 5 months to process an application for disability benefits, so any client who wants to apply should begin the process as soon as possible. Legally, disability benefits payments can only start once the client has been disabled for 5 full months. For additional information about applying for Social Security disability benefits, look for Disability Starter Kit in the presentation resources. The Starter Kit includes more detailed information, as well as a checklist and worksheet to help claimants gather the information they will need to apply for benefits. Additional information that is useful once your client is approved is what you need to know when you get Social Security disability benefits, which is also in the presentation resources. Let's look more closely at SSDI, or Social Security Disability Insurance. SSDI is based on work history and the amount of FICA taxes paid. Your client must have worked in jobs covered by Social Security to qualify for these programs. The Social Security Administration uses a system of credits to determine whether claimants qualify for benefits. The amount of earnings needed to qualify for credits increases each year, and an individual can earn a maximum of 4 credits each year. In 2015, each $1,220 earned equals 1 Social Security credit. The number of credits required to qualify for disability benefits depends on how old your client is when he or she becomes disabled. Let's look at a few examples. If your client becomes disabled before age 24, he generally needs 1.5 years of work or 6 credits in the 3 years before becoming disabled. If your client is 24 to 30 years old, she generally needs credits for half of the time between age 21 and the time she became disabled. If your client becomes disabled at age 31 or older, he generally needs at least 20 credits in the 10 years immediately before becoming disabled. After your client has received disability benefits for at least 24 months, he or she will be automatically enrolled in Medicare. The client will get a Medicare card shortly before or after the 24-month mark. In general, people become eligible for Medicare at age 65. The period to apply for Medicare based on age is from 3 months before your 65th birthday to 3 months after your 65th birthday. Medicare is also available for someone who is in renal failure, regardless of age. If you have a client who is in renal failure, the client's dialysis social worker will take care of getting the client signed up for Medicare. There are 2 parts to Medicare: Part A, which is hospital insurance, and Part B, which is medical insurance. Let's take a look at what Part A covers: inpatient hospital care, long-term care hospitals, skilled nursing facility care, nursing home care, hospice, and home health services. Now let's look at what Part B covers. There are 2 types of services covered under Part B: medically necessary services and preventive services. Medically necessary services are services or supplies that are needed to diagnose or treat a medical condition and that meet accepted standards of medical practice. Preventive services include health care that prevents illness or detects it early enough for treatment to be most effective. These services include various types of screenings as well as vaccinations. There is a monthly premium of $104.90 for Part B, but this amount can change yearly at the beginning of the year. There are a couple of ways that this premium gets paid. The first way that the premium is paid is through your client's SSDI. In other words, the cost of the Part B premium will be deducted from the client's monthly SSDI benefits. Another way to pay the Part B premium is through a Medicare savings program. Once your client applies for Medicaid based on disability, it can take 4 to 5 months for Medicaid to begin paying the premiums. Once the Medicare savings program kicks in to cover the premium, the client will get checks from Medicaid to refund the $104.90 for each month that it was deducted from their SSDI checks. There are limits on monthly income and resources to qualify for the Medicare savings programs. The income limit in most cases for individuals is $1,333 per month. Let's review what qualifies as resources. The current resource or asset limit is $4,000. Resources include money in a checking or savings account, stocks, and bonds. They do not include a home, car, furniture, other personal and household items, burial plots, or up to $1,500 that has been set aside for burial expenses. The Medicare Savings Program helps pay for Part A premiums, Part B premiums, and deductibles, coinsurance, and copayments. The next program that your client may be eligible for, if he or she is considered disabled, is Medicaid. To see the services that Medicaid covers, take a look at the Medicaid Benefits coverage table in Program Resources. Medicaid coverage can be retroactive for up to 3 months prior to the month a client applies, if the client would have been eligible during that period. If the client thinks she might be eligible, she should apply. Once a disability determination is made, The individual must then undergo an asset test and meet specific income requirements. Immigration status and state residency status are also considered. Let's take a closer look at each criterion. Income level. Individuals who have income less than $1,000 per month gross, which is the 2015 Federal Poverty Level or FPL, qualify for full Medicaid coverage and do not have a deductible. Immigration status. Medicaid is only available to individuals who are U.S. citizens. However, non-citizens may be able to receive coverage for emergency services. State residency status. To be eligible for Medicaid in Michigan, an individual must have proof of residency in the state. Cash asset limit. Cash assets include cash, bank accounts, stocks, U.S. savings bonds, land, vehicles, property, life insurance, or anything else that can be converted to cash. Anyone who has cash assets greater than $2,000 is ineligible for Medicaid. So, once the client is approved for Medicaid, there are out-of-pocket costs that the client will be responsible for paying. One of those costs is prescription copays. Another cost is the deductible, which is determined by the client's income and county of residence. Each county has an assigned protected income level based on the cost of living, which is subtracted from client's income if it is greater than $1,000 per month. The remaining amount is the deductible that the client has to reach each month before Medicaid coverage kicks in. For example, Client A lives in Wayne County, where the protected income level is $395. Her gross monthly income is $1,100. To calculate her Medicaid deductible, subtract $395 from $1,100. Her deductible is $705. Client B lives in Macomb County, where the protected income level is $402. His gross monthly income is also $1,100. To calculate his Medicaid deductible, subtract $402 from $1,100. His deductible is $698. Another way that a client can meet the deductible is to use Medicaid to pay old, unpaid medical bills. For example, a client can have $1,200 in unpaid bills that he wants to apply to his $100 monthly deductible. He can pay that $1,200 over the course of a year by breaking it up into $100 increments each month to meet his Medicaid deductible. For current medical expenses, the amount due must be applied to the deductible in the same month that the expense is incurred. Any bills from a prior month cannot be applied to the current month's deductible. The date of service, not the billing date, determines whether the amount is applied to meeting the deductible. Because it may take several weeks for your client to receive the bill, he can ask for an estimated bill before leaving the medical appointment. For example, Client A has a deductible of $100. Client A has an appointment on June 15th and incurs a bill of $175. The client's bill is generated on July 2nd, and Client A receives the bill on July 8th. As of June 30th, Client A's medical bills totaled $175. That means that Client A met her deductible and paid $100, and Medicaid paid the additional $75. Even though the $75 is paid during the month of July, it is not applied to July's deductible. Client B also has an appointment on June 15th and incurred a $25 medical bill. The billing date is July 2nd, and Client B receives the bill on July 8th. Client B's deductible is also $100. As of June 30th, Client B's medical bills totaled $25. That means that Client B did not meet his deductible for June. When Client B gets the bill on July 8th, he will be responsible for paying the $25. Even though the $25 is paid during the month of July, it is not applied to July's deductible. Now, let's turn to SSI, or Supplemental Security Income, which is another program that a client may be eligible for based on disability. Many individuals who qualify for Medicaid based on disability also receive cash assistance under SSI. Also keep in mind that it is possible for a client to qualify for both SSI and SSDI. This is for people whose SSDI falls below the amount of SSI benefits. SSI is a federal income supplement program that is funded by general tax revenues and provides money to meet basic needs for food, clothing, and shelter. The eligibility requirements also include income and resource restrictions, as well as citizenship and residency status requirements. The amount of SSI received is affected by the client's earned income, workers' compensation, unemployment benefits, or pension. The cash asset limit for SSI is $2,000 for an individual and $3,000 for a couple. Cash assets include cash, bank accounts, stocks, and U.S. savings bonds. Land, vehicles, property, and life insurance are non-cash assets. The client is automatically eligible for Medicaid if he or she is getting SSI. Also, he may be able to get other benefits like food stamps. Amounts for SSI benefits are $733 per month plus $42 per quarter for people living on their own, which in this case means paying their own living expenses. For people who live in someone else's household, they receive $480 per month, plus $28 per quarter. This refers to someone who doesn't pay rent or pays rent that is below fair market value. The quarterly payments are the state supplement that the state of Michigan offers in addition to federal payments. The 4 programs we just covered are based on a person's inability to work. However, the Social Security Administration wants people to return to work and has incentives in place to encourage this. SSDI has a 9-month trial work period to determine whether the individual is able to return to work. SSI recipients who have earned income do not go through a 9-month trial work period, but their income affects their SSI amount. If someone returns to work, they need to begin reporting to the Social Security Administration beginning with their first paycheck. Now that we've covered federal disability programs, let's move on to our state disability program. State disability assistance provides $200 per month to eligible disabled adults. Clients can apply for this program on MyBridges. Eligibility is based on disability determination, income, asset limits, and residency status. To determine disability, a client must meet one of 3 criteria: be receiving Medicaid based on disability, live in a special facility like a licensed substance abuse treatment center or be within 30 days of completing treatment, or be certified by MDHHS medical consultants as unable to work for at least 90 days due to a mental or physical disability. Both earned and unearned income can reduce the SDA amount. Examples include wages, self-employment earnings, rental income, Social Security benefits, and veterans benefits. Cash assets are limited to $3,000 and include cash, bank and credit union accounts, investments, retirement plans, and trusts. Residency requirements are that a client be a U.S. citizen or have acceptable alien status, be a Michigan resident, and not be receiving cash from another state. One other way to qualify for SDA is to be the live-in caretaker for a disabled person. The caretaker may qualify as long as he is below the income and asset limit. Now that we've covered the programs based on disability status, we're moving on to several other programs with different eligibility criteria. You can take a look at the assistance application in Presentation Resources, which contains instructions for applying for various types of assistance programs. We will only be covering 4: the Insurance Assistance Program, State Emergency Relief, the Food Assistance Program, and the Home Health Services Program. Let's begin with the Insurance Assistance Program, or IAP. IAP pays health insurance premiums for eligible individuals so that they can keep their health insurance benefits during financial difficulty due to their illness. It does not pay deductibles or copays. Typical IAP clients have private insurance or Medigap, which is also called the Medicare Supplemental plan. The IAP application must be submitted along with additional information that is listed on the first page of the application. The application, MDHHS Form 1661, can be found on the MDHHS website under Forms. Eligibility criteria for IAP include an HIV diagnosis, currently being too ill to work in the current job, or a substantial likelihood of being too ill to work within the next 3 months. This must be verified by a physician or nurse practitioner who will complete the medical certification section of the IAP application. Other qualification criteria are that the client be a Michigan resident, have no more than $10,000 in cash assets, not be eligible for employer health insurance other than the current policy, and have gross monthly income that is no more than 200% of the federal poverty level. In 2015, 200% of the FPL is $1,961 and will change yearly. The next program we will discuss provides assistance to low-income households. The State Emergency Relief Program helps clients who are facing an emergency that threatens their health or safety. Eligibility for SER is determined by specialists at local MDHHS offices. SER may offer cash or other assistance through nonprofit organizations like the Salvation Army. Needs that qualify for help from SER include preventing shutoff or restoring heat and utilities, home repairs to correct unsafe conditions or restore water, electricity, or heat, relocation assistance such as preventing eviction, and burial or cremation costs. The Food Assistance Program is another program that offers assistance with providing food for the client's household. It is not intended to provide total food needs for the month. The highest amount that an individual can qualify for is $194 per month. The program can be used to buy foods that will be prepared in the home, such as breads and cereals, fruits and vegetables, meat, fish, and poultry, dairy products, and seeds and plants that produce food. The funds cannot be used to buy prepared foods, beer, wine, liquor, cigarettes or tobacco, pet foods, soaps or paper products, household supplies, vitamins and medicines, or food that will be eaten in the store. Eligibility is based on the financial situation of all members in a household. Everyone who lives together and purchases and prepares food together is considered a member of the same household group. Like the other programs we've covered, eligibility for the Food Assistance Program is based on certain household expenses, income, asset limits, and residency status. Expenses that help determine the benefit amount include rent, mortgage, heat, electric, water, telephone bills, child support payments, dependent care expenses, and some medical costs for people who have a disability or are at least 60 years old. The asset limit for eligibility is $5,000. Assets are cash or any property you own, such as checking and savings accounts, investments, some trusts, property or real estate other than a first home, and any vehicles other than the first one. Income that is considered includes wages, self-employment earnings, income from rental properties, Social Security benefits, and veterans benefits. Applicants are required to live in Michigan and be either a U.S. citizen or have acceptable alien status. Your clients will apply for the food assistance program online through MyBridges or in person at their local MDHHS office. An interview is required before your client can be approved for this program. Most interviews are conducted by phone, but the client can request that an interview be in person. Approval or denial should occur within 30 days. Clients who are approved for the food assistance program will get a Michigan Bridge card, which is a debit card they will use to buy food. Businesses that accept the Bridge card display the Quest logo. The brochure How to Use Your Michigan Bridge Card is available in the presentation resources. There are also PDFs for retailers and farmers markets where the Bridge card can be used. Certain medically related costs paid out of pocket on a monthly basis and not covered by any other benefits program can be used to increase the food assistance amount. The total monthly out-of-pocket medical expenses must be at least $35. This deduction is based on what the client says and is only verified if the amount seems unusual. The final program we will discuss is the Home Help Services Program, commonly known as the Chore Check. This program is for individuals who need someone to provide physical help with at least one activity of daily living. Usually, a spouse caring for a spouse or a parent caring for a minor child are not eligible. Examples of daily living activities include eating, dressing, taking medicine, grooming, bathing, using the toilet, moving around the home, preparing meals, and doing laundry or other basic housework. To be eligible for home help, clients must also be eligible for Medicaid and have a doctor's statement that they need personal care. The client employs the home help provider, who may be a friend, relative, neighbor, or employee of a home help agency. The amount of help the client needs each month is determined by the MDHHS worker, who assesses the client's need for home help services. The last thing I'd like to cover with you are tips on how to advocate for a client for these benefits programs. These are actions that you and/or your client can take when disagreeing with an assessment or disputing a decision. Usually, clients aren't able to change which MDHHS worker handles their case. If the worker is not able to resolve an issue, call up the chain of command to the supervisor, section or program manager, and finally the district/county manager. Some issues are a matter of policy. If this is the case, the chain of command is not going to resolve these types of issues. You may need to file a request for a hearing for matters related to policy. For severe non-policy issues, write a letter to the district/county manager. The letter should be specific and detailed and ask for a response within 20 days. Keep a copy of this letter. Keep a detailed phone/contact log that includes who you talked to, when you talked to them, why you talked to them, and where you talked to them if the contact was made in person. If you're in doubt about anything we've covered in this webcast, call Ken Pape at 313-456-1678 or email him at papek@michigan.gov. He has a wealth of information on benefits programs and is happy to answer your questions.